Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is March 29th, 2024, and I'm here to bring you some trading levels for the upcoming week of April 1st, 2024. And we'll be taking a look at some popular symbols that lots of people like to trade. So we'll take a look at Apple, Amazon, Netflix, Microsoft, Google, Meta, NVDA, and Tesla. When I do, you'll see that in fact not every symbol has a quality level, and of course that's the nature of trading. That not every chart has a setup, as much as people like to think there is. So, at any rate, we will take a quick look at those eight symbols. All right. Before we get going here, the usual sort of disclaimer. Everything that I'm going to show you here is for educational and informational purposes only. In the case of our subscribers, what we do is of course, we help our subscribers on the journey to becoming competent, confident traders. At Precision Trading Labs, we are neither financial advisors nor money managers. All right. So let's take a look at some of the charts here. Also, before we get into this, if you look below this video, you will see a link. That link actually is a detailed description of the foundation of our trades that are based on the supply and demand concept. I will reference in this presentation here, showing some supply and demand levels in some of these charts, and I'll kind of touch on them and give brief explanations here. But for a more detailed explanation, if you go to that link that I just mentioned, that's below this video, that'll go into that in a little greater detail. All right. So let's take a quick look here. Right now we're looking at Apple here, and so in fact, right here, this is what's referred to as a supply zone. Okay, this is a daily chart of Apple. We have a drop and then a consolidation here, and then a fierce drop out of this level down to here. Okay, this right in here, this was basically supply and demand were in balance here, and then all of a sudden there's an exhaustion of buyers here. Okay, and so that all that left is supply, and so the theory is when price returns to this level, we might in fact see a repeat of a downward move here. And so that's what we're waiting for here. We're waiting for price to return here in order to express a bearish trade. Okay, and the way, of course, we could express a bearish trade would be out of the supply zone. We could either short the stock, we could buy a put, okay, and then we could also sell premium by doing a bear call vertical spread, and that would be a way of collecting premium up there. Okay, so those are three different ways to express a trade from that supply zone here. Okay, as an example here, here is a prior trade that happened out of a demand zone that had been created before. So right here is a drop, a base, and a rally here. Okay, this represents a sudden exhaustion of sellers here. Okay, right in here, buyers and sellers were in agreement within this relatively narrow range, and then of course price fired out of there. So this is a demand zone where we expect where we would have expected a bounce. And so we had identified that previously, and then we can see when price returned to this region here, okay, in fact, we ended up getting the bounce out of there. And so what we did was we expressed a trade here by buying a call, okay? And so we bought a call here at 168.60. Price, basically, Apple bounced pretty much about $10, and so we ended up on the call. We paid a $9.15 premium for the call when we got in, and when the trade ended, that call was worth $14.50, and so we made about $5.40 on that, and that represented a 58% a return on that trade. So what we're looking for is obviously a similar result when price gets back up to this supply zone, except of course we'll be buying a put up here. But that's what we're hoping to see. Obviously, some result that kind of resembles that. Okay, so that's the deal with Apple on that daily chart here. If we shift over to Amazon, right here on Amazon, in fact, so just slide this over here a little. So Right in here, there is a little, there is a, I think a 2 hour demand zone here. I'm really not in love with this here, if I'm not mistaken. Yeah, this level is okay. Actually, this is a 2 hour chart here. So we had a drop, a base, and a rally here. Okay, so in fact, we're waiting for a pullback to here, and in fact, so that demand zone here, this is about 2.5% below where Amazon closed here at about 180. Okay, so it needs to drop about $5. But then this is where we would then be looking for a rebound. We would looking for a bounce out of here. And again, we would express that trade presumably by buying a call. Okay, so that's 2.5% down from there. And then after that, there's really there's no quality demand there until about 6% down. Right over here, this is an area of kind of sloppy support, kind of right here. But this is already tested. Whatever demand here has already been tested and used up. So I would not be looking to catch a bounce there. So the next one would be kind of right down here. So that's where a demand zone is. And if in fact, and then if we look above current price, this is an area of this is all tested supply here already. Okay, and this actually goes back a ways here. Okay, so right in here, this is an area where price came back here, and if we go back further in time, we'll see. Okay, this is all kind of, this was an area of supply that got created, and then hit once already in there, and then it hit a second time over there. And so by the time it gets back here now, this has been already chewed up. So I would not be looking to express a trade out of this level that already worked twice here. So, so right here though, we have this area of demand here again, and then then there's an area of demand that's lower. Okay, so that's the story with Amazon. If we move over to Netflix, let's squeeze this down a bit here. Okay, so right here, and in fact, this I think resolves to better to a daily zone here. So let me shift this back to a daily chart there. So right here we have a drop, a base, and a rally there. There's a gap there, bullish candle there. It pauses, and then there's another pop here. So there's the expectation that there is still some residual buying pressure that's waiting to be tapped here. So we would need about a 5% pullback to get down there from about 607 down to about 575. But this is where we would be looking to express a bullish trade out of this demand zone here. Okay. And then above here, there's really nothing to short against until we got up to about 607 and then to about 660. Now, of course, you may say, well, why not just go long if that's the case, if you're waiting for it to get there? And of course, we have no idea whether it's going to get there. Obviously, if I knew it was going to get up to this supply zone, I would of course go long on this or buy a call en route to it getting there. But of course, I don't have a clue as to what it's going to do. So that's the reason why we don't anticipate. Excuse me, why we don't predict. The only thing we could do anticipate is if it gets to one of these levels, then we have a fairly good idea of a good percentage of the time what's going to happen. And of course, when we do this, we would also, of course, manage our risk. Okay, so for instance, right here at this demand zone here, okay, if we were going to get in here, okay, here would be our entry, and then our stop would be right back here. And generally, we use roughly about 10% of the daily average true range to help guide us on that. Okay, so this would be about $1.40 or so. So we would put this down at around 566. Okay, so that's where our stop would be. That's where our entry would be. So again, we would need a pullback here, and then we would buy a call down here, and then that would be our way of expressing the trade. Okay, and then again on Netflix, the supply zone is a fair distance above. That's a good 10% higher, and that's we wouldn't be looking to short until it got up to there. So, but that's a distance away. Microsoft. Let's see here. So right now we're actually a short distance away, from this supply zone here, and of course this is an all-time high on Microsoft. I'll certainly be cautious about this. Obviously we have a rally, a base, and a drop formation here. Again, price was in here for only a couple of days, and then there was a sudden exhaustion of, in this case, an exhaustion of buyers. Okay, so when price returns here, there's an expectation that we could in fact see another drop out of there. Okay, so that's where we would express a bearish trade. Okay, so but we're going to be cautious about this, because obviously if the market is strong and we get back to this all-time high, it could just drive through this level. So we'll wait to see with what sort of energy this actually reaches this level. But in theory, this is certainly an area of interest in order to then express a bearish trade. Okay, if we look down here, I have this mark 2H. That means that there's a 2-hour level here. But in fact, because of all this trading that occurs right before this, I wouldn't just automatically take the trade right at the front line here. So what I would wait for this to do is to actually drive into the level and then reverse, and then as it's coming out, then take the trade. Okay, so I wouldn't just rely on this to sort of come down and automatically hold, because of the fact that there's all of this prior trading that occurred in here. This may have just been chewed. This may have chewed up essentially all the demand that was here that might have been here before. So that's the story with Microsoft. Take a look at Google here, and okay, so right here there was actually a level that we liked here. Okay, and this was actually what we thought was a great level here. We had a rally base and then a drop there, and obviously the massive gap there. But in fact, what happened was this came up. The trade actually started to work, and of course, in retrospect, I guess I made a mistake here. But I actually thought that perhaps it would then actually try and fill this gap. And so as a result, this thing came down. It started down here, and in fact, it actually got close to 2-to-1. And I probably should have taken off a piece of this, but I didn't. And then it kind of just drifted right back to this zone. And in fact, I closed this out right at the end of the week here. So in fact, I ended up breaking even on this because I think what happened was there was certainly a little time decay that obviously came off of this, but because of the fact that we're now heading towards earnings, and we could see that's April 23rd, when you get to the last month before the earnings announcement, the implied volatility will tend to start to rise on this as you head into the earnings announcement. So I assume what happened here was we basically got back to more or less the price that I got into the trade. Some value, of course, was lost due to time decay, but I would assume then that because of the fact that the implied volatility went up, in fact, the time value really it was compensated by the implied volatility. So even though 8 or 10 days on the calendar passed, the time value really didn't change much on this. So as a result, we pretty much ended up breaking even on this. So that was fortunate. But again, I probably made a mistake here by not taking off a piece of the trade here. But again, I was kind of anticipating that this was going to, probably get further down in terms of filling this gap. Obviously, I was wrong. If we go to Meta, okay, so right here we have a drop, a base, and a rally here. Let me just squeeze. Okay, and in fact, this is a 2-hour level. So in fact, if I change this to a 2-hour chart, okay, we'll see that formation right here. So we have a drop, a base, and then if you notice it has NVDA there, gap. Okay, this is what I refer to as the NVIDIA gap. On March 21st, on February 21st, the market had been sort of in the doldrums for about 3 or 4 days, and then NVIDIA announced earnings and knocked it out of the park, and that kind of revived the market. So this gap from November 21st to 2nd, that's in a lot of the charts. And so Meta is no exception here. So this would be an area where I would be looking to express a bullish trade on the pullback here. Okay, and in fact, let me put the label on here. I don't know why they're not there here. So let me just put the label on on that level there. So that's at 468.75 to 461.75. Okay, so that's where the range on this level here is about $7. So that's why, of course, it's an expensive share to begin with, but that's another reason why using calls on this, or even doing a bull put credit spread to collect premium, or even selling a call above the call that we buy and doing a debit spread. Those are all ways, attractive ways to express the trade, rather than spending $470 a share on this. So that's the level on Meta. We take a look at NVIDIA. NVIDIA, we actually recently had a nice credit spread. In fact, what we had done here, we had actually sold premium down here. Okay, and then we ended up getting a bounce. It pulled back, and then it kind of bounced again. But we had sold the 830 and bought the 820 put. Okay, and so we collected some premium there. I took off a piece here. Then I was kind of saddened to see it go all the way back here, which of course started to make the position worth more, which of course we don't want to happen when we sell premium. But then it bounced off this level a second time, and then the second piece of the trade expired worthless. Okay, so that was a pretty successful bull put credit spread. So as of now, there's really nothing here there's nothing here, excuse me, on the demand side I'd be looking to trade. Up here, there is a supply zone up here, and so we would be waiting for a bounce up here, up to here, in order to express a bearish trade. There is a little demand zone right here on the 2-hour chart, but in fact, because of this near miss here, and the fact that it hasn't left with any sort of energy, I suspect that this is not a great level. Okay, so even though this drop-based rally looked attractive at the time, this price action that has happened since then suggests that this is not a great level. So in fact, the only thing I'm really going to be looking at here is a return up to here in order to then express a bearish trade from that. So that's, and of course, in terms of the, where does that have to go? So this has to go from here to there. And if we just look at it in terms of a percentage move, that means it has to go up about 5% from where it closed yesterday. So that could certainly happen within a week. So we'll see what happens there. And lastly, we'll finish off with our buddy Elon at Tesla. And let's see, what do we got here? So there's really nothing nearby. There is a quality daily supply zone here. In fact, if I change this back to the daily chart, it'll look a little less messy. So right there, we have this base drop here. So there's a supply zone up there, and then excuse me, and then there's the one right here. So this is a rally base and a drop there. But you can see that's actually a long way up. Okay, from where we are now, that's about a 14% move, because you'd have to go from about 175 to 200. So that's probably not going to necessarily, I mean, it could happen in the next week, but most likely it's not. So we'll actually keep an eye on this, though, because the earnings announcement's on the 17th. And so if this thing takes its time drifting up here, we're not going to have any time in the trade. If this thing gets here, let's say on April 11th or something, we're not gonna be wanting to dive into this trade, because then we're only going to have 3 or 4 days to go before the earnings announcement, and I would certainly not be interested gambling on the earnings announcement. So we'll keep an eye on this, and if it takes its time coming up here, then we'll just sort of suspend the setup. And then once the earnings announcement happens, depending on where price goes, we might, if it's in the vicinity, then we can reactivate the setup. But again, so we need to keep an eye on the calendar with respect to that. All right. So at any rate, and then down here, this was a trade that already happened out of a prior demand zone there. I haven't taken it off the chart there, but right here was a rally, a base, and a rally base rally out of there. And then if we look over here, okay, this was a nice little brief call trade, long call that we had. And so we got in here on the 14th of March, and we got out of here, what was that, on the 21st. So we were in this trade for basically a week. And so we got in at 11.6 at 163, which was the stock price. And then we got out after about a 15-point move on the stock, and that accrued. We ended up picking up about $7 with the option. All right. So that was a prior trade. Needless to say, when it comes up to this, we'll be looking to hopefully have that happen by buying a put here. But we don't see anything below here in the near term in terms of any sort of bullish trade. So at any rate, that's what I got here. Again, but to repeat though, if you look at the below this video, you will see a link to the detailed explanation of supply and demand if you're interested in learning more. So again, thank you so much for your attention, and I'll see you next time.